Hello everybody. So I want to make this video this Thursday night. This video called Biggest Drawdowns and my valuation updates. I'll tell you a little bit about valuation, what I think, and we'll talk about the drawdowns that happened during the bloodbath of Thursday, November 13 of today here in the US, end of day. At night now, it's the evening. Bloodbath, we're back in April. I mean, this is essentially how this has felt. So let's go. So one of the first stocks, of course, that was an absolute bloodbath was HIMS. HIMS down 42% from October 15. Think about that, 42% down from October 15. HIMS, as I've said before, is a stock whose Q3 surprised me by its strength. I was surprised by the strength of the revenue growth in Q3 for HIMS, despite them losing their GLP-1 partnership and a huge chunk, a very big chunk of their GLP-1 category. They still were able to post outstanding growth numbers. The stock dumped, and it's dumped ever since. And this tells me that this dump has everything to do with macro. Today, we've had an announcement that we've been waiting for a little while, and we were all very excited about it. I will make a full video on this at some point when the market gets back to its senses and stop dropping senselessly all the time. But this is a big deal. They launched lab testing, so it's going to be $199 a year or $499 a year. And what's funny is that of course, like most products of HIMS, this is very likely HSA eligible. So health savings account, you can pay for that. Oftentimes, like your first physical is going to be covered, but not all your labs are going to be covered. And sometimes you need to get lab done outside of physical, so you need to pay for a doctor visit. And then you need to pay for the labs. So this one, it comes and they noted they have a network of more than 2,000 providers. So this includes all of the labs that you would get into a physical at a physical, and then some, because at the physical they're going to try to give you not a lot of complete labs. And if you go through the list of all forms of labs that they do, it's they are entirely breaking the business models of a lot of longevity companies out there who charge between $6,000 and $20,000 a year. They're going to charge for their better sample $499. This is a huge deal. They're going after physicals. Most of the reason why people get quote unquote their physical every year in the US is that so that they can get prescribed labs. Yeah, oftentimes you need a prescription for a lab. This time, HIMS is going after not only the lab market, but the physical market, which is the bread and butter, which is the money maker for most mom and pop doctor offices. This is going to be huge. And also the total addressable market of this in the US is 300 million people. I mean, it's essentially everyone but the kids. So it's enormous. I think it's going to be a tremendous market for them. And this is so beautiful to see with the presentation. Also, I started watching it, very polished. And of course, the stock dumped today 8%. It dumped 8% today on this. Anyways, the stock is now trading at a 0.10. This is much cheaper than not too long ago where it was trading at a 0.15. The rule of 40 is a rule of 60. The lowest we've seen HIMS in a long time at 36. I find the stock to be a steal at these levels, an absolute steal, an actual steal. Let me talk about LifeMD. LifeMD is down 70, let's round it up, 69% technically, but let's say it's down 70%. 70% from the $15 high. You may remember when LifeMD hit $15, the market was very optimistic for some reason about GLP-1s, which, LifeMD sold GLP-1s. The problem is that they had issues, getting the branded GLP-1s reimbursed. Anyways, the stock was bid up by hype, and then it was brought right back down, except this time it was brought down at a level that I've never ever seen LifeMD this cheap. It was brought down to a 0.029. LifeMD, I know oftentimes people say it's HIMSS who's the Netflix of doctors. LifeMD is actually much closer to the Netflix of doctors. LifeMD is a subscription, $19 a month, unlimited doctor visit, right? That's the subscription of LifeMD, and they just launched their pharmacy, and the doctors at LifeMD can prescribe you drugs, which you most often go get at your local Walgreens with a coupon, so they have a little bit of good RX going on. But, you know, for LifeMD, they also have their own pharmacy. One of the key distinctions is that LifeMD tries to use your insurance benefits, while HIMSS doesn't even try. That's kind of like one of the main distinctions. LifeMD has a copycat of HIMSS called RexMD. They operate RexMD, which is a copycat of HIMSS. LifeMD is probably responsible for stealing a lot of the ED business from HIMSS. LifeMD and other companies, you know, that's why HIMSS said they stopped focusing on ED, because there's competitors who break the prices. LifeMD is one of these competitors who breaks the prices. I've called LifeMD before baby HIMSS. I cannot possibly understand why the stock is so cheap. 0.029 on enterprise value of gross profit over revenue growth. That's top 5 cheapest in my spreadsheet. It's comparable to OSCR. The valuation is comparable to OSCR. By the way, I could have put OSCR in this video. OSCR dropped big today. I forgot to put OSCR. I could have put OSCR in this video. I could have put Tesla, but Tesla is kind of up for the year, so forget about that. But I just realized now I forgot OSCR. OSCR would count as a company that I find dirt cheap right now, especially because they don't need the subsidies for their guidance. Anyways, let's talk about another stock that has been absolutely battered by the market. It is SuperMicro. I mean, it is true, SuperMicro has a tendency to overpromise and underdeliver. And that's not really bad. It's just that they keep delaying, and the market loses patience. The market has no patience, quite frankly. The Q3, it's not a Q3 for them, but you get what I mean. The last quarter that they had a few days ago at SuperMicro, I thought was fine, maybe a little slower than expected, but they got punished. And my guess is, even if they had a great one, they would have been punished equally. As I look at all of these patterns, they seem to be punished with no regards to fundamentals. Anyways, SuperMicro is now dirt cheap, trading at a 0.22, 40% from recent highs, actually more than 45% from August highs, 40% from October highs. So you can see the hit. If you have a portfolio that's very growth heavy like mine, you can see the hit that some of these stocks and some of us owners of these companies have been, enduring in an awful month of October, and it just got worse in November. Anyways, this stock is trading at 0.22. The rule of 40 is 50. And what does SuperMicro do? They do liquid cooling. They are a provider of rack systems, but they do green computing, so they have prided themselves, and they have developed a suite of racking systems that use less energy. And using less energy is of paramount importance today for data centers. XAI, when Elon Musk built Colossus with XAI, half of the build was with SMCI. The other half of the build, as far as the rack is concerned, was with Dell. Dell is a competitor of SMCI, but Dell is not a pure play. Dell, you gotta buy all of the bulk. SMCI is essentially like a pure semi-Taiwanese company who sells a bunch of liquid cooling racks and liquid cooling product and liquid cooling solutions. And, their racks are co-designed with NVIDIA. They're an NVIDIA-approved supplier. If you go to NVIDIA's website, you can scroll through dozens and dozens of SMCI products, specialized products for cooling and racks and all that sort, and GPUs and setting up your GPUs. Anyways, predicted growth 43%. Next 12 months is predicted to grow. So, and that actually may be off, right? Because if NVIDIA is going to grow at the speed that NVIDIA guided at GTC, to me, this is a low number compared to what they could grow. EBITDA margin is okay. It's a hardware. They don't make nearly as much money as NVIDIA, which NVIDIA, of course, is a designer. They don't own the fabs. They own the facility. They manufacture. This is a manufacturer. NVIDIA is not a manufacturer. NVIDIA owns the IP. Anyways, gambling.com. Let's talk about gambling.com. Oh, talk about a bad day to remove just a tad soft earnings. That was a bad day. Keep in mind, gambling.com, if they hadn't released their earnings today, they would have probably been down 10 to 12%, like all hypergrowth stocks. Unfortunately for them, they missed on their revenue by $2 million, and the stock was down 23%. Gambling.com is a stock that I like at these levels. Enterprise value over gross profit over revenue growth is 0.09. They are guiding revenue for the full year of 2025. They're guiding 165 million. The stock is trading at 270 million of market cap. This is a growth stock. They're growing at 21%. What does Gambling.com do? They own a bunch of state-specific websites that help you compare lottery, compare gambling odds, winning odds. I don't gamble. I don't know much about that industry, but just know they operate dozens of state-specific websites, which they have acquired over the years. For example, they own in Nevada. For example, they own Vegas.com, and they sell tickets to shows and data about gambling, essentially. And they have a data selling business where they sell a lot of their data because they track all of these websites. They sell that data to a lot of these providers of gambling services. Anyways, it's a specialist of gambling. I listened to a few of their calls. I think this company is legitimate. But I don't understand. It's down 70%. I mean, this is entirely ridiculous. The market wants nothing to do with growth, nothing to do with profitable, high-growth company. The market just wants to look at the indices right now. That's what it is. Look at how profitable this little company is. 31% EBITDA margin. So you're trading at 1.4 times forward revenue, 1.5 times forward profit, gross profit, and 5 times adjusted EBITDA trailing 12 months. That's way too cheap for a company. This company is trading like a mall going out of business, but it's not a mall going out of business. It is a company growing, albeit a little lower than I like. I just don't get it. I mean, there's an anomaly with the small caps. There's such an anomaly with the small caps going on right now. Whether it's HIMSS, LifeMD, Gambling.com, you look at these companies under the hood, everything fine. Everything is fine for these companies under the hood. But the market's just selling them off because growth bad. That's literally, that was my video, like no thinking allowed. That was my video from earlier today, right? This is what's going on. This is crazy. If this was a private business, I mean, if many of these were private businesses, like the buyer of a small private business would dream of numbers like this, dream. But you can't get that if you buy the stocks. Anyways, let's talk about the miners and AI HPC businesses. Bloodbath galore. It's like across the board where everybody you lose 44%, you lose 48%, you lose 40%. Everybody. I mean the bare minimum was you lose 40%. Essentially, or I guess 35% for Nebius. Sorry about that. Nebius only dropped 35%. This is entirely ridiculous. The correlation between all of these stocks is clearly, there's correlation going on. So CleanSpark, I like CleanSpark very much. RIOT, I like RIOT very much. I like these two. My favorite miner, as I've said multiple times before, my favorite miner is Mara. Why is it my favorite miner? Because you get all of the mining business, and you get extra Bitcoin because they trade below the value of their Bitcoin at 85% of the value of their Bitcoin. Mara is known as this supposedly lesser operator of Bitcoin mining. It is true. They have old rigs. Their rigs are nowhere near as shiny and new as CleanSpark's or RIOT or Iron's rig. It is true they have old rigs, but they've done a better job at increasing the efficiency of their rigs over the year. They focus on dispatchable computing, which means that their source of competitive advantage is to try to move the rigs in places where electricity is 1 cent per kilowatt hour. That's why they announced a partnership with Marathon on their call, talking about how they're going to be doing more flare gas, energy generation. The company is a little spread out. It's a little all over the place. But if I do the sum of the parts of all of the assets, plus I add the extra Bitcoin beyond the MNAV, right? I just see deep value, and it's down 44% for a hodler. It's down 44%. Think about the deal that they did in France with Exaion. This is quite fascinating. They were able to snap these 4 data centers from Exaion for something less than 100 million. Some really low numbers. data centers that are rented to EDF, that run, all of the data of the power company, and a quantum computer. They acquired a quantum computer in Canada. Anyways, this is way too cheap. The market, for some reason, hates Mara. I don't understand it. Eventually, the market is a weighing machine. If you look at the sector, it was the whole sector dropping like this. The whole sector of Bitcoin miners ETF down 36% in a matter of, 27 days, 23 days, or whatever. Very, very low. Nebius also down. Yeah, Nebius, they reported their Meta deal, $3 billion. It fell on dead ears. Nobody cared. And that's probably because they released it at the same time as their earnings. But their earnings were great. Frankly, the movements of these stocks, sometimes I really wonder how much it has to do with under the hood are they doing. These stocks are doing well under the hood. Cipher jumped earlier because they signed a deal, $5.5 billion deal with AWS. So you have Cipher signing a deal with AWS. Nebius, huge deal with Microsoft, huge deal with Meta. Right, we're waiting, but in my view, at some point you'll hear something from CleanSpark, you'll hear something from Mara. CleanSpark has some very nicely located data centers in Alabama, and they also have one in Tennessee, something like 50 minutes drive from Memphis. RIOT has a very nice data center, I think in Corsicana, something like 30 miles south or 40 miles south of Dallas. So we have a shown business model of these miners getting deals for their energy with hyperscalers. Like that's not just a narrative. That actually happened. These deals have been signed. So I don't understand why this is so cheap. It's a liquidity problem. They're selling off anything they can sell, and they sell off this stuff because I guess growth bad, innovation bad, future bad. That's the only thing I have to say. Okay, Treasury's drawdowns. Strategy, more like tragedy strategy, down 54% since July 16. I cannot believe I am saying this. Down 54% since July 16. Now trading below MNAV. But guess what? Strategy doesn't need to use the common ATM anymore. They do the preferred. They issue at a price to par. They don't issue at a price to NAV anymore. They issue at a price to par. And they've unlocked Stretch. Stretch is the iPhone moment. Until the liquidity breakdown of this Thursday afternoon. Before that, they had 5 days of uninterrupted Stretch trading at 100, hitting 100, ATMing over and over and over again. I am still so curious to see what's going to happen on Monday. Everybody's bearish right now. I get that, but I'm a long-term holder and I own the common. So I'm not bearish. I'm very bullish. Yeah. If you have options expiring this week or next week, that's unfortunately really too bad. This market has not been easy. It's been a tough market for everybody, to be honest. For everybody, it's been a tough market. Metaplanet is $2.40. Metaplanet at this point, trading so cheaply. I mean, they have a buyback in place. Hopefully that has some effect. Oh, CleanSpark has a buyback in place too. That's one thing I forgot to talk about. Anyways, trading at a 0.86. I mean, it goes without saying, of course, that at these levels, obviously, in my view, strategy is much more attractive, because at these levels, you have a situation where they're equally discounted, but you have the blue chip in there. So if you can get the blue chip for roughly the same price as a challenger, I would obviously get the blue chip. Not to mention, you can get it on a modern broker like Robinhood and stuff, and you don't have to pay a $50 fee. Anyways, but I'm sitting on my Metaplanet. We'll see if Metaplanet is a candidate for tax loss harvesting, honestly, because at this point the loss is getting bigger for me on Metaplanet. So might as well just sell it entirely and put it into strategy, right? And you take the tax loss harvesting and you put it into strategy. I expect we're gonna see tax loss selling going on between these treasuries, people swapping one for the other, and so maybe you bought strategy at the top and you have a loss to take on strategy, so you sell strategy and you buy Metaplanet, right? That's tax optimization right here. Unfortunately, when things drop so hard, we have to optimize taxes. NAKA, oh my gosh, let's not even go there. Let's talk about NAKA. Down 97% from the peak. That one was a catastrophe, and maybe it's a catastrophe because that one was particularly hyped up. Trading at 0.45 MNAV. Now, I will put a caveat out for NAKA. They have unlock periods. You know, I didn't go too much into the weeds, but they have unlock periods coming up. I think one in a few weeks and one in something February or something. So if you're interested in NAKA, make sure you look at the lockup period because that could impact share count. So make sure you look at that. David Bailey is communicating on that stuff, trying to be transparent. Make sure you take a look at that. And I'll conclude with EMPD, Empire Digital. So this one, that was an importer of Vietnamese golf cart who was going out of business and decided, hey, okay, I'm just going to take my treasury and put it into Bitcoin. What I like about this one, and again, this is one I'm studying right now, but there's so many deals out there that, you know, it's actually trading as, I should have put the screenshot. It's actually trading at something like a 0.6 MNAV. But what I love very much about it is that nobody knows about it. So because nobody knows about this one, very few people are shorting it because nobody know about it. Like a lot of these movements, whether it's kindly MD or you know, the miners, they're heavily shorted, very heavily traded. This one, nobody really knows about this one. And so I've noticed a pattern with a treasury company. It's like if you look at one that nobody really knows, you have a much better maintenance margin because, you know, there's not a lot of volatility because nobody really knows about them. And then B, they're less volatile, right? This one was only down 1%, but it's up in after hours. So this one didn't move. Empire Digital today didn't move on a day where everything else moved. And so maybe it didn't move because nobody knows about this stock and it flies under the radar. And I think there's a few stocks like that are able to fly under the radar. So that could also be a strategy. That has been a tough week, folks. Tough week. So this too shall pass. But investing in the 2020s is not for the faint of heart. Absolutely not. We live in an environment where a tweet can make the markets drop 20%. You know, don't do margin. Don't do any crazy stuff. That's my view on this. Anyways, this was not investment advice. This is not financial advice ever on this channel. Only entertainment on this channel. That's all I do. I'm an entertainer. Please please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.